Hi, I'm Tom Leahy, managing partner here at Optimum Ed. Candace and I speak a lot about planning for, the admissions process. Spend a lot of time talking about applications and essays and all of that. But I thought we should give a little time to understanding how financial aid works. Because I think if parents understand better how that system works, how aid is distributed, they can make better, planning decisions financially. And two, I think it's obvious to anybody who watches the news that the cost of college continues to outpace median household income, and average student debt continues to rise as a partner to that increase year over year. And we know it's an issue when they start drawing political cartoons about it, right? So let's talk about paying for college. So the first thing to realize as a family, as a student, as parents, is that the average student does not normally pay for higher education from one bucket. The sources of money to pay for college comes from different places, and as this chart describes, of course, a couple are through the financial aid process, scholarships and loans, but there's other things involved as well. Savings of the parents, the student was working and saved some money to help out, maybe even friends and relatives get involved in the process. But I think we need to understand that we have, in this day where things cost what they do, then we've got to get creative and bring different sources of money together to be able to pay for college. So what does that financial aid piece look like? Well, there's two sides to the coin there. When we talk about financial aid, student assistance, the first is merit-based, and that's just like it sounds. It's based on the qualities of the student, what they bring to the table, and what programs the school has that those talents or gifts, match, right? So if you have a great tuba player and the school has a band scholarship, there's an opportunity there, that sort of thing, right? And it's application driven. The other side of the coin is need based, and it is based on income and assets of the parents and the student, and there's a formula that is used to determine the outcome of need-based eligibility. And so the two come together when you get accepted to school, to a college, and they will be sending a offer letter on the heels of that acceptance to tell you what the school is able to offer the student in terms of financial assistance. So we're going to talk about need-based primarily, because I think the merit side of things are pretty straightforward. The schools have scholarship programs, and a lot of times you go to the website and they'll tell you what the qualifications are and whether your student is eligible to receive that money. In some cases, the schools are very delineated in terms of the requirements for different levels of assistance. You have to have this GPA and these test scores to get this level of financial assistance. Others, it's a little more subjective and a little more mysterious, but each school is different, and so you can't make general statements. You need to do the research and see exactly what the programs are, what the qualifications are for those merit awards. However, the need-based side is a little more complex, and so that's what we wanted to talk a little bit more about in this session. So at a high level, need is determined by figuring out through the formula that the federal government has, and there's another formula too we'll talk about in a little bit, but it determines what the family can fairly afford for 1 year's cost of education. That's the EFC, expected family contribution. Each student has one. So if you have 3 students, they're all in college, they're all going to, have to file separately, and they all have their own EFC because the student may be working and that one not, and that sort of thing. So that's why each student has their own. But they compare that number, what the family can fairly afford for 1 year's cost of education for that student, to the cost of attendance, the cost of the school, total cost. If there is a difference, if what you're expected to pay is less than what it costs to go, then you've established need. If what you can fairly afford is the same as the cost of the school or greater, then there is no need. Pretty simple. The formula is a little more complex. We'll talk about that in a little bit. But understanding that that's basically the overarching process to determining whether there's need-based eligibility or not. And again, here's a visual demonstration of how you establish need. And you can see that it's not the cost of the school. I mean, it's not the EFC that changes, it's the cost of the school. The EFC is that light blue bar. So the EFC, once determined, does not change for the family, but it's the cost of the school changes, and that then drives the need up or down. I think that's pretty intuitive. So this formula that we're talking about to determine expected family contribution looks at 4 parts, basically the parent's income, and the parents' assets, the student's income, and the student's assets. In each case, there are other things involved. Parents' income, there's a living allowances, there's allowance for taxes and that sort of thing. There's an asset protection allowance that's used to protect some of that money for retirement. It's based on the age of the older parent. But once those things are calculated, then there's a spread, percentage spread that is used based on the level of income that comes through that process to determine what the parent's contribution is. And then they look at student's income as well. The student gets an allowance for the first $6,000 in earnings that they make, and then there's also taxes there as well, that tax allowance, but there is no allowance against the student's assets. So if there's money in the student's name, which means that their social security number is on that account, then that is assessed at 20%, versus 12% of parent assets, as you can see above. So anyway, those 4 things come together then. Those 4 values come together to create this expected family contribution. And so where is the money coming from? What does the money look like? So this is gives you an idea of the billions of dollars that are distributed each year in federal student aid, and this is only need-based. There's some $18 billion in merit aid that is distributed by colleges and universities each year. But on a need-based side, you can see that the majority of the money is based in federal loans. That's the backbone of their program. And then the others are, again, smaller amounts, but you can see where they're coming from. Institutional grants, 26 billion, federal Pell Grants, 28, etc. Each state has their own programs that they provide to residents. Keep that in mind as well. One of the reasons they might stay in state is because, depending on the state, there could be some pretty nice assistance programs that are available to resident students. All right. So who controls the money? And again, we want to talk about the 2 sides of the coin. So we're talking about need-based assistance, it is administered through the financial aid office at the colleges and universities. Okay, this is federal money, this is state money, it's all managed by the financial aid office. Even though you file a FAAS when it goes to the Department of Education, the results of that calculation is returned to the school, and they use it to distribute their federal money and their state money. We'll talk about the CSS profile here in a minute, because that's another process that some schools use to determine need and look at distribution of money. Merit aid is administered by the admissions office as part and parcel of the application process. When you submit an application for attendance, more often than not, I would say probably 95 or better % of the schools in this country, universities and colleges, determine merit scholarships based on that application. Certainly in some cases there's outside, an alumni establishes a trust that provides a scholarship for students that may be in a particular program, and that has to be applied to separately. But in terms of the money that the school controls, in 95% of the cases, it's done through the application process. But again, because there is some that don't, you need to make sure you understand who is controlling the money at the schools you're applying to. And so when we talk about, the federal programs for students, there you can see on the screen the different programs that the federal government runs. These are all need driven, and some pretty deep need is required to get some of this assistance. For example, the Pell Grant, you have to have, income below $23,000 a year. And then, the CIOG is supplemental, and it is, again, need driven, pretty deep need. Work study is often need driven, but it's a job that's assigned to the student, and there's a minimum number of hours that they work a week, but it's written into the award letter. But the thing to keep in mind with work study is you have to work the job to get paid. Okay, and so you have to understand that when you're looking at your award letter, if there is work study included in that, you have to work that job to get paid. So in most cases, you can't include that money up front to pay for tuition fees, room and board, because you haven't earned it yet. So just keep that in mind. Perkins loan, low interest, again, need driven. The Stafford loan is a hybrid. So any student, whether they have need or not, can get a Stafford loan. The only question is, how much of it is going to be subsidized by the federal government, which means they would pay interest for the student while they're in school. Unsubsidized would be the non-need piece, and the student is responsible for paying interest on those loans while they're in school. They can also start paying principal if they would like, but they certainly should pay the interest that's reported twice a year, because if you don't have to pay it, but if you don't, the interest is added to the principal of the loan each time it is calculated, and that means that each time you're paying interest on top of interest, what they call capitalization. And so the mountain that you have to pay off when you get to the other side of college is just going to be a lot greater. So just put it in your mind that if you take a unsubsidized Stafford loan, you're going to pay the interest, if nothing else, while you're in school. It's the best course of action. Then, of course, a PLUS loan. Again, this is also a non-need based loan. It's a parent loan, and the parents can qualify for up to the difference in educational expenses after seeing what the school is doing in terms of assistance assigned to the student. If there's more money needed, the parents have access to the PLUS loan, but understand it's a credit-based process. Well, And then, depending on the state that you're in, they may or may not have, student financial aid programs to assist the student, and they may be merit or they may be need based. So you need to check with the state higher education council or whoever drives education in your state to determine what those programs are. And then college administered grants and scholarships. And again, this is something that the school does based on their rules and their policies as determined by their board of directors. So again, we talked about that a little earlier about figuring out exactly what those look like, doing a little research. So that's the system, what's available through the system of financial aid. Now, when we talk about the package itself, when we indicated that you get accepted to a school to attend, and if you are, then that school has got to address that deficit that you've created or that need that you established, right? The formula says you can afford $10,000 a year, and the school costs 20, then you establish 10,000 in need-based eligibility, which the school has to address. And so when they send you this form, a letter that tells you what they're offering you, there's going to be three things in that letter. There's going to be the loan. Well, we talked about the Stafford loan. It will be there. That's the first thing that they were going to offer. So if you remember, a Stafford loan for the first year of school is $5,500. So if you establish need of 6,000, probably the only thing you're going to be offered is the Stafford loan, because that's $5,500. And if you, depending on how much need you established, then they're going to look at work study if they participate in that program. And once they put that in the offer letter, there's still more assistance needed, then they start looking at the grant, the free money for need-based. And then, of course, they will bring in the any merit scholarships that may have been awarded to the student. So that's how it's bottom loaded, as I say, in terms of what you are offered. You don't have to accept it. If you don't want the loan, you don't have to accept it. You can choose what part of the offer you want to accept, but that's how it works. And you can see here again, depending on the school, cost and the need established, how that money looks in terms of being first the loan, then work study, and then grant. So in College X, there is no grant money because of the amount of need established. Whereas in College Y, the students at 17,000, they're going to get grant money. So that gives you an idea of how it works. Now the other part of the process, and again, this requires you to do a little research, which I encourage, because just as we said, you establish a certain amount of financial need, and if you're accepted to that school, and they have to be able to address that need that you've established if they accept you as a student. So the complication is, in a lot of cases, based on the number of students and the resources the school have, they may not always be able to cover 100% of your need. So you need to see how colleges and universities have historically distributed aid, and that information is available. So here's an example: Virginia Tech, University of Richmond here locally in Virginia, but you can see that Virginia Tech, only the blue number only covers about 55% historically of the need that a student demonstrates, whereas University of Richmond, they cover 100%. Okay, so it's important to look at those numbers, because if you start doing the math, in some cases, it may be look less expensive to go to a small private school because of the assistance that's provided versus, a large public school. Just pointing it out, something to consider and to look at and look at the numbers if you're concerned about your dollars. Let's touch on some kind of special situations that occur, and they're not dealt with in a really an intuitive way. There's a lot of questions surrounding some of these things, so let's talk about those for a minute. We have this question of dependency versus independency. The parents often ask me, say, well, we're not paying for college, so our student is dependent. Well, that is not the grounds for dependency or independency. There are special rules, specific rules that determine whether a student is independent or not for financial aid purposes. And that means that as an independent student, they're only reporting their financial numbers and not that of the parent. So you can see the advantage of being independent. But there, as I said, there are specific rules. You have to be 24 in the year that you file for financial aid to be independent. You have to be married or have other dependents. You're a veteran or on active duty. You're a graduate student or professional student. Both your parents are incarcerated or you're a ward of the court. These kind of things. There's a list of specific exclusions that make a student independent, not just because mom and dad say they're not paying. So you need to take time and read the information about that if that's your situation. There's ways of addressing it, but you need to be aware that is the rule regarding independence. Parents divorced or separated, again, if parents are divorced or legally separated, only one parent is putting their number on the financial aid form. But which parent? Right now, the rule is that it's not the parent that takes the child as an exclusion on their taxes. They don't, it's not the parent that claims the student for taxes. It's the parent that the student lived with the 12 months prior to filing the FAFSA. Okay, it's based on domicile. And if the divorce requires a 50-50 arrangement in terms of living, then it's going to fall on the parent that provides the most financial assistance and so forth. So just be aware that the parent's numbers that have to be used are the parent the student is living with and has lived with for the past 12 months or the majority of the year. So more than one student in college. This is, I guess, sort of a benefit, I suppose, if you want to put it that way. But if you have two in school at the same time, that expected family contribution number is basically cut in half, given the variables with the student's financial situation. So you're not, if it's determined that one student can afford $10,000, the second student is not going to be required to pay $10,000. They're both going to be, required to pay $5,000 a piece because of that rule that the expected family contribution is basically divided by the number of students that are attending. And then the question of need blind. What is that? Need blind means that the school in no way, shape, or form considers whether the student requires assistance as part of the admissions process. So there's very few schools that are 100% need blind. So if this is something that's a concern, then you probably need to make a call, do your research to determine their policy. and whether or not it's going to have an effect on your admissions results. So there's just some special circumstances that you need to be aware of. And there's others, but those are the biggies that always come up. So in terms of filing for financial aid, as in the bottom box there, the rule now is that as 1 October, the senior year of high school, the student can file for financial aid. And it's based on, so for example, this year, they're filing in October, as of 1 October 2021. It will be based on the prior year's taxes that have been filed. So it'll be based on 2020 tax return. So we used to wait until January to file, and it would be based on, for example, in January 2022, it would be based on 2021 taxes. But now that we're filing early in October, it's based on that previous year. So, you know, in all intents and purposes, we go back 2 tax years by the time it's all said and done. So keep that in mind. We indicated previously that there's 2 processes. There's free application for federal student aid. All schools use it. It is used to distribute federal and state money. So all schools use it. And I would suggest to you that you need to file the FAFSA, whether you think you're going to have need or not, because through that process, the school will certify that the student is in school at least half time, enrolled at least half time, which is a rule to get financial aid. And of course, access, if you want the option of using student loans, you need to have that certification from the school. So whether you want to or not, I suggest you file the FAFSA no matter what your financial situation is. So you have that option. Don't have to use it, but if you don't file, you don't have the option. So I think that's probably a wise advice. And then a lot of private schools use a CSS profile, which is another process. It's administered by the College Board. It's much more financially invasive than the FAFSA because they use it to distribute, you know, the collegiate money, and, you know, money from their endowment fund and that sort of thing. So they feel compelled to find out in more detail the circumstances of the family financially, so they can be do a better job of helping students that really need the help. So you need to make sure that you know which forms, you know, well, I guess not which form. We know everybody's going to take the FAFSA, but whether the school is going to take the CSS profile or require it. And of course, the other part of the CSS profile is there's a fee for filing the profile. There isn't a fee for the FAFSA. That's why it's called free application. Makes sense, right? Okay. Good. So having said all that, a year from now, things are going to change. It's going to change, you know, in a number of ways. There's legislation afoot that's going to change how we calculate need and what kind of help the student needs. So the income protection allowance, for example, is going to increase, which is a good thing. But this parent, this division of what the family needs to pay on a, you know, per student basis will no longer be divided by the number of students in college. So, you know, it's yet to be seen exactly what the impact of that's going to be, but you know, be aware of that. And then there's other, you know, certain cash, outside cash support that's received is not going to be required to be reported. So that will be helpful as well, but more to come on that as we get more information. So stay tuned. And then once, you know, we have been accepted to the schools we applied to, and we received those letters of offer financial assistance, you need to take a look at them and determine, you know, which school is going to do the best for you financially if that's a concern. So they all look different. They're all, apples and oranges, basically. They all serve up the information in a different way. So you need to dissect those letters and put the numbers out, on the table in the same manner, so you know exactly what you're getting, and what that looks like, so that you're really making the best decision financially, if that's a concern. If you need help with that, be happy to discuss it further. But at the end of the day, once you've done that analysis and you determine where you're going to attend, and how much assistance you're going to be receiving, the last part of the process of paying for college is really determining how the family is going to pay for anything that's left over, right, after financial aid. How are we going to handle the family's part of the cost? And so there's different ways that can be done, as you can see on the slide. How much can we absorb in the budget? Are we going to take more student loans? Are we going to take advantage of the payment plans that schools have? Is there personal assets we can lean on, or maybe even the house, who knows? But the point is, we need to have a little family, a mini family financial plan to address paying the family share. And there is a process on our website that you can take advantage of, kind of walks you through that process, and to make sense of it. And it's under the Paying for College tab on our website. So, with that, if you do your homework, you do your research, you do your analysis, and you make good decisions, perhaps Dad won't have to sell his kidney to, pay for college. If you want to get more information, you want to have a conversation, you have questions, you can get to us through our website at optimedcenter.com. There's ways of contacting us there through the website. So with that, I will let you go, and thanks for spending time with me. And we'll see you on the next video.